What's going on, FUD Nation, and welcome back. Today we have another amazing episode with Mike over at Bloomberg, one of the senior commodities analysts over there at Bloomberg HQ. Honestly, this was one of my favorite episodes we've done with Mike. The narrative about Bitcoin, what it's maturing into, what these next few months and years are looking like, and the data backing up the narrative of Bitcoin as a hedge against global risk, global volatility. I'll put it this way. If you like Bitcoin, if you like crypto, this episode is a must watch, and I hope you enjoy it. By the way, if you're excited, do me a favor, hit that like button. It really helps the channel. With that said, let's launch into this amazing episode with Mike from Bloomberg. Welcome back to the channel, Mike McGlone over there at Bloomberg HQ. How you doing, Mike?
I'm good, Elio. Hello, and thank you for having me back.
It's an absolute pleasure. I know that the audience has been requesting a new appearance for you on the channel for quite some time. They love you, the bearer of the unbiased news, and I think we all can benefit from your analysis in times like this. Certainly an interesting time going on in Bitcoin, and your titles for your emails have gotten, I think, 10x as intriguing. So good for you on that. The last ones have been amazing. So.
Right, those are mostly me, but sometimes I have editors who improve them, and oftentimes they have to kind of governor me a little because it can be. I like to have some fun. But so for me, everything I publish is for. Number one is for the Bloomberg network, so it's obviously very much professionals and institutional investors, so that's where we have a good fit. And as you notice, and one thing, I'm completely objective. I have to be objective, and that's one of the things I really enjoy, having been on buy side and sell side. My main goal is getting it right.
Yeah, well, that's great, and obviously I believe the whole crypto industry is in this transitional phase where having people who are outside of the crypto bubble giving reflections, giving analysis, I think that's something we should all be taking a lot more time to appreciate, because that's the part of the industry that we hope we're in right now, which is integrating into other industries. So hopefully, it's part of a great trend of crypto going a little more mainstream. But with that, let's turn it over to you. This show is about you. So tell us what's going on right now, Mike. I see your last title was Crypto Increasingly About Bitcoin and 5,000 Wannabes. Love that title.
Well, that's, I think, the way we need to look at it. And any of your viewers, any of other viewers, and anybody investing in the space, and typically people don't invest. People are more likely to trade, and I dissuade them from doing that. I used to have hair, and I used to be a trader. It's part of the reason I enjoy what I do now. Is I've made a lot of money. I lost a lot of money trading, and I found it's a major tax on human capital. But buying and holding things that look like they have good value, I think, are much more attractive for a human lifespan and lifestyle, and that's why I default to Bitcoin. Yep. And that was part of the reason for that headline. So what I'll do now is I'll share my screen. I can show it a few things.
We can talk a little bit more about that, because in the crypto industry, there's recently been a wave of controversy around promoting leverage trading and whether or not that's even ethical to promote people to go try this leverage trading stuff out, because there's a big belief that, essentially most people just get burned, and that, the whole leverage, in crypto, there's 100x leverage on some of these platforms. So if the thing moves 1%, you're liquidated. And there's a big controversy as to whether that's something that anyone should really be going near.
Well, for a guy who started in the futures trading pits, where you typically use leverage, where maximum you put down mostly is 5 to 10%. Leverage is great as long as you use it properly, and that's where this is very important. I'm glad you brought it up. So let's use an example. There's a lot of people, our viewers, and a lot of people here will purchase a home in their lifetime, and they won't pay cash. They will get a loan, and that's leverage. So typically, if you put 20% down, that's 5 times leverage. So let's put it in that context. It allows us in a capitalist system to really do things sometimes we would not have been in a more repressive, who knows what type of system. So it just has to be used properly. So that's why I've always come from leverage environment. And the number one rule when you trade is, we used to joke around in trading pitches, oh, he's trading without stops, which meant he's taking a lot of risk. You got to have a stop. If you're going to buy or sell in leverage, you got to stop yourself out if you're wrong, and maybe take a partial profits if you're right. But remember, with leverage also, there's things like long calls where you get all the leverage you want. You're not going to lose more than you pay.
Yep.
So it's how you use it. Just like an instrument, like an airplane, can be used as a weapon. If used properly, they can add a lot of value. Typically, things I like if you're a net holder and you want to take in a little income, you can always sell a few calls against your positions. In worst case, you get called away, but you can add income and things like that.
Yeah, I think you're absolutely right. It's definitely, I don't think it's necessarily like a scam here to be telling people about leverage trading, but it's important to realize that to be adequately prepared, you need to train for it. You need to take it very seriously. And the people I know that have been successful consider it a full-time job, a full-time engagement. It's not something you should do casually. And just like you said, double-edged sword. So with that, I'll let you take it away for us.
You should be able to see my screen. I'm maximizing, as you taught me before, as a picture. When they once in a while I do TV and they ask me, I love doing battle of the charts, and oftentimes when I do battle charts, you get to bring in the chart you want. And this is one I made sure I featured, and partly because this is what I want people to understand about Bitcoin: is the number one thing to remember is the supply is going away. Mm-hmm. And when you analyze any type of asset, that to me is what really matters, is what's going to be your supply. So if you buy any other crypto besides Bitcoin, what are its competitors going to be? What's the supply and how many more are out there? And one thing that I really enjoyed about your last show, and I even took notes, you said about the point when things are in need and there's a technological innovation that oftentimes will impact the price. And that's one thing I want to point about Bitcoin. All that matters is adoption now, because we know supply is limited unless there's something that I can't predict in the code or something that messes up the supply. What I'm showing you in this chart is by a couple of years from now, not just 2088, I'm sorry, 2019, within a year or two, the annual supply is going to decline to less than 2% a year. That's about the same as gold. Historically, it's never really increased. And the big difference is 90% of all that supply and Bitcoin has already been mined. Boom. So we know what's going to happen there. So to me, that's the thing to remember. The only thing that matters then is adoption. This is what I'm pointing out, is this line here in orange. That's the annual rate of supply by 2021. It's going to be below 2%. And here's the current Bitcoin price. So the price is supposed to go up in that environment. But my key thing I wanted to point out is that's not good money, because there's no reason to spend it. Why would a rational person spend something that's becoming a collectible? And that was a recent title I used. So the only thing that matters is adoption. And with that, I can pass it back to you. So the key things I watch for adoption is, obviously we have things like hash rate and everything, but from an institutional standpoint, futures, my background. Futures mean institutions. It means adult supervision, CFTC. Open interest is increasing. You've mentioned this on the show. We've started trading options. I remember being in trading pitch. You don't start trading options on something until you're in liquid enough volume. And then we have other things like backed and fidelity, and it's all about adoption, and we all know that Bitcoin's winning that race.
Yeah, I appreciate that, and I agree. Bitcoin is in a place where if it just stays the same, it can serve a similar function to a reserve currency, a gold, a collectible, and a hard asset of sorts. But at the same time, to be electronic cash, there's so much more that needs to be done. But that said, if it ever does become electronic cash, the opportunity there is tremendous, because cash is obviously $80+ trillion, whereas gold is more like $7 or $8 trillion. So I think you're absolutely right, and it's exciting to see the narrative that you're supporting here of the halvening, reduction in new supply, and what that should do for overall value of each Bitcoin.
Well, you nailed it there too. Is we already have electronic cash, and this was on your recent program. I really thought it was great. That's Tether. As much as people might hate Tether, I'm not. I'm just an observer, and that is, it's winning that race of being electronic cash, because we have a global, stable, basic currency. Everybody adopts the dollar. They have to, because it is what it is. And if you have any type of currency that fluctuates a lot, you probably have to be careful spending it because it's too discombobulating. And if you know it's going up, why would you spend it? Why would you sell it? But Tether is already nailed that space. So this is where I like to point out is every time I hear about stable coins and Tether and Libra, I get more bearish on the broad market because every one of those currencies out there has one main issue: is they're too volatile, there's way too many of them, and there's ease of entry. And a standpoint of a simple supply and demand, when something's easy to create supply, prices ain't going to go up much. Okay, that's number one. And why would you use anything like that for cash unless it's very stable? We've already have one winner, Tether, boom, and we have the other winner for gold, and that's Bitcoin. That's the key thing where I wanted to point out in my recent comment where, I claim that I don't say Satoshi Nakamoto did something wrong, but his key mistake, in a good way, was he created something that's an ideal collectible, but it's probably never going to be a good version of cash again. So why would you spend something that's designed to go higher in price, but you're going to spend your dollars because historically, over time, a piece of paper will depreciate versus hard assets.
Popular opinion here in crypto land, but Tether is incredibly successful. It's incredibly dominant, and the actual effect that it's had, I think, will be looked back on and reanalyzed over time as people start to really even comprehend what Tether has done. It has become an international payments rail where people are trusting. I know that people don't trust that Tether has the reserves that it says. There's a lot of distrust of the Tether sort of entity. However, in practice, people are using these like digital dollars, sending them all over the world, avoiding, costly and inefficient legacy systems. And, I heard somewhere that it's the primary means of sending money between Russia and China. Stuff like that can't be overstated how important it is. And apparently the people sending back and forth the money don't care whether Tether's fully backed or not. They don't care because it works. And so it's quite interesting to see the first mover advantage in the stablecoin race and how stablecoins in general are really fulfilling such a key need globally. But I'm a big believer that over time, it increases exposure to and the ability to diversify into something like a Bitcoin. So I'm a big believer that Libra, USDT, all those things, as much as they are demonized in some sense within the crypto industry, I think their adoption overall is a story that leads to more adoption of crypto. That's my belief.
Agree with you completely. I'm kind of showing a bit of a chart, which is, with the Tether market cap. The thing that concerns me, it helps the whole crypto space, but I think it's mostly Bitcoin. Now, right now, obviously, we're seeing a bit of a bid in the altcoins. I think part of that is speculative frenzy, and then you have to look back at what you own and say, okay, am I buying it just to sell it? Yeah, most people are. Am I going to try to sell at a higher price? Right. As long as someone else buys it, does it have a practical value that other people really want to hold it, and there's going to be a lot of competitors, and usually that's a negative for most other. I mean, just look at Ethereum. When it was first launched, there's just one of them. Now there's EOS and Cardano. What are all the competitors for Ethereum? They're so easy to come on board. So that's why I'm really worried about altcoins, and that's where every day that goes by, I differentiate more into the space. And one thing you just said that really made difference was about Tether. The market doesn't care, and that's what really struck me back in April, May last year when we had that U.S. New York Attorney General, kind of pressing back on Tether. The minute the market said we don't care if it's back, we're adopting it. It's been adopted. It's ARB'd to 1 generally. Then I said, if the market doesn't care, then why should I care? Next step higher.
Yep, completely agree. And as a student of just tech, of just business growth, it's important not to have emotional biases and to try to just see the market as an objective fact. The market's never wrong. The market's never right. The market is just the market. And if the market's adopting it, that's a fact right now that Tether is fulfilling the need for a stable international borderless asset. And what that means is obviously the potential for Facebook to come in, the potential for China to potentially launch their currency. You're seeing those potentials because obviously there is a reality that China or Facebook could very much so create something bigger than Tether. However, the market's speaking loud and clear that this is a need that's being filled, and they're very happy with the way it's being filled. So.
Well, that's another narrative I'm really enjoying. I think some people are misinterpreting about a lot of countries, i.e. China, trying to create their own digital currencies or cryptocurrencies, however you want to call it, they're still going to be backed by their governments. I don't see how any country can do that, and that's where you feel a differentiation of Bitcoin. And there's only one other comparison that I know of, and that's gold. And that's part of my analysis I'll be publishing on that tomorrow is that increasing correlation between Bitcoin and gold. So one of the key indicators I use now and using going forward for the price of Bitcoin is the price of gold. Now, gold's at a 7-year high. It's taken out last year's high. Now, we know for Bitcoin to take out that 2017 high, even last year's high at 14,000 is a big stretch. But for Bitcoin just to do normal volatile year, stretching to 16,000 and doubling the value from the beginning of the year, it's just meh, it's normal. Taking out the 20,000 high, now that's a big difference. That's probably going to take a while, but gold's already indicating it should do that. And what you're seeing now is the fact that it's really transitioning. Remember, for most of Bitcoin's history, it traded very much in sync with the stock market going up. So basically that massive rally we had from 2010 until now in the stock market. And that was, to me, more spurious. What we're seeing now is like today, this is Monday, we're seeing, and even Friday, stock market going down and crypto's going up. I think that's the major transition that's happening. Bitcoin is becoming more of a risk-off asset, and the rest of the cryptos are speculative, but I think they're going to come around to having problems with the stock market correcting. But Bitcoin is more like gold, becoming more like digital gold.
Yeah, and what you said is very important, right? Bitcoin, all that needs to happen now is adoption. The network, if it grows, if more people enter, more actual utility, then the actual underlying asset should go up in value. I know a lot of people actually think that the futures markets, the leveraged trading markets, are essentially potentially either propping up the price of Bitcoin or holding it back. What is your feeling towards that? How would you contextualize those beliefs?
It's a virtual guarantee. It's pressuring volatility. As far as what it's doing with price, it's not a big part of the market yet, but to me, that's part of the transition. Is we all know when something's first launched and trades at a penny to $2, the volatility is going to be very high. That's what it was. But that's one thing I think I'm virtually certain is that volatility in Bitcoin should continue to decline, and futures are a big part of the adult supervision to help you arb those out. So, for instance, everything is going to be compressed. Here's a good example. I came to New York in 1993. I was an over-the-counter options trader in U.S. Treasuries. All you want to do is buy the bid, sell the offer, hedge your deltas, and make money. That was so arbed out, there was nothing left. To me, that's the holy grail in Bitcoin and cryptos right now. Is there's a lot of OTC desks that are just buying the bid, selling the offer, mostly in options, hedge your Greeks. Thank you very much. Very low risk, very good business. The only way you can really do well in that is if you have wide spreads. Futures are pressuring those spreads. It's a place to hedge. It's a place to really algorithmically trade in the market. It allows the bots and all the artificial intelligence systems to really kick in, and when markets get a little bit overbought, they'll sell, a little bit oversold, they'll buy, and arb everything together. So it's just a matter of time. It's becoming more of an adult market. And futures are part of that.
It gives the quant firms essentially an entry point where they can essentially exact their influence. I think that it's important that the crypto conspiracists in all of us doesn't go to thinking that the existence of these systems prevents any kind of bullishness. I'm sort of a believer that we saw a huge bull run last year, and we saw a huge, bear market. It's clear that there's plenty of volatility on the bone still with Bitcoin, regardless of this futures market. So I appreciate you clarifying that.
Well, that's because that's the environment I came from. I used to enjoy being in the trading pits, and a lot of my I'd be on. I was on the phone, so I was dealing with institutional customers. I used to enjoy that New York attitude that they kind of get a little bit pissed off that it's the tail wagging the dog, and because the futures markets are so big and there's so much leverage, you can get a lot of oomph when when you're getting 10 times leverage. Of course, you get stopped out too, but you can move a lot of things around.
Especially if you're one of the bigger players, and obviously in crypto, smaller pond. So if there's big players, they can really influence whether or not they get stopped out, and that's kind of the overriding conspiracy. But sort of swerving back from the conspiracy alley, I want to go back in. You've got a lot of important charts coming up on the screen. What are we looking at?
Well, one thing I wanted to show is Bitcoin and gold. I'm just putting that up right now. and showing to me why they're becoming more correlated. So here's, Bitcoin's kind of staggering in this range. It's stuck in a range. It's going to do that for a while, but gold's breaking out. Gold's at the highs, it's retracing 2013, which is a big plunge. It's just doing that matter of factly. It's taking some time, and I think they're going to continue to follow that. Bitcoin should continue to follow gold. So, and it's got a lot of fundamental reasons, and that is like what's happening today, declining bond yields. What's your competition is that yield. So one thing I also want to show you is the beta. What you see in green, that's the beta of Bitcoin in white to the actual price of gold. Now this is measured, I'm pretty sure I am on 52-week basis. So a lot of this is subjective, but you can't argue with 52 weeks. See how that basically beta is the highest ever? It's over, near 2, 1.5. That's kind of how you measured it. It basically means over that period on a typical day, when gold's up 1%, Bitcoin should be up 2%, and vice versa. But to me, that beta, look how low it was here. It should continue to increase. And that's basically the relationship between the new firstborn crypto and the baby on the block who's becoming more mature and old guard gold. And I'm being objective. I like them both.
Yeah, well, that's awesome. And obviously there's a bit of a crypto anarchist fantasy of a recession being the best thing for crypto, specifically Bitcoin. What is your feeling after looking at stats and correlations like you're seeing? Gold typically does very well in times of economic uncertainty. Should we be expecting something similar?
Exactly. To me, that's what's happening now. You see stock market down. It's been down for a little while. Gold's up. It's one of the few assets going up, and bonds. Bond yields are down, but gold's doing quite well. Bitcoin, I'm kind of surprised the alts are doing so well, but I think that's more speculative. But Bitcoin and gold is the environment I expect. And to me, that's what's happening, is this transition to the alternative assets. So the biggest problem in most alpha markets in the last 10 years, meaning people try to beat the market, is the market's been performing so well. That's an S&P 500. Once that stops, and maybe it's starting now, everything's going to turn to the alternative assets. Gold and Bitcoin, I think, are prime potential candidates.
I mean, it's truly amazing. We're in historic times, and birth of a new financial system. Now we're at unprecedented levels of bullishness in mainstream markets. You're seeing tremendous amounts of red flags that we could see incoming recessions, pullbacks, and you have what's set up is an amazing experiment, right? And it's nobody has a definitive answer for this, but there is a potential that Bitcoin as an asset could really receive a tremendous amount of support, of maturity, of growth, and an insane amount of value appreciation if, for example, we do enter one of these tremendous recessionary periods, that Bitcoin and gold become those safe haven assets. And then if you add in a bunch of inflation into the normal monetary system, you would see potentially this desire to own more and more Bitcoin. And that cycle I could see bringing Bitcoin, just from a pop culture standpoint, from an investment culture standpoint, to really being kind of a rock star status.
Well, you mentioned inflation. The key thing to remember about inflation is it's almost always a currency phenomena. Mm-hmm. It's just requiring more of that piece of paper to buy the physical asset. Mm-hmm. So we've had massive amounts of inflation in certain parts of the world. Argentina, Venezuela, Turkey, a little bit in Mexico. I mean, Mexican peso has been declining in value, and currencies more closer to me is Chile and Brazil, because they're related mm-hmm. to commodities. Mm-hmm. But in the price of gold is always a great neutralizer for currencies because it's a physical hard asset. Bitcoin's started enjoying that place. So I don't expect anything. I expect still more deflationary trends to be predominant, i.e. they're being led by bond yields. But that's the train wreck that we're heading for. So look at the macro right now. Is we have global U.S. debt to GDP is increasing. Mm-hmm. 108%. That means we're just borrowing more indiscriminately, and bond yields are declining. That means the bond market doesn't care. If the bond market doesn't care, something's got to give. And at some point, that's got to change because it's almost impossible to borrow forever and have increasing debt and not having yields reflect that. And the key thing is gold's reflecting that, and Bitcoin's joining that party. So to me, that's where your brewing inflationary trends are coming. But I expect it to be worse on a deflationary standpoint first before at some point we get to that inflation. And that's just kind of following macro and economic trends, reading about them for the last 50, 60, 100 years. For instance, the way we squashed inflation in the 80s was pretty high, substantially high interest rates. I think the only way we're going to really squash deflation out is negative rates, but that's an opinion.
Well, I would love to return in a second to maybe unpack a few of those concepts for those who are not fully familiar with all the terms you just ran through. But is there a potential, like you see there, that Bitcoin could start to function with the rise of stablecoins, even if Bitcoin doesn't work like peer-to-peer cash? Is there a potential that Bitcoin could start to serve the purpose of like a long-term checking or a long-term savings account, whereas you see stablecoins functioning almost like checking accounts? Is with the mix of these economic factors, could you? And obviously, this is several-year horizon. We're not expecting anything to happen overnight. But from your view, even though it's a collectible, could it stand to serve a purpose increasingly as a savings mechanism?
Oh, sure. Savings, perfect. Checking account, you want Tether in there because you're going to be using it every day, and you want it to be stable. But every day you goes by, that checking account gets a little bit of high balance. You transfer some into Bitcoin and gold. Why? Because they're stores of value, and I mean it's not the best, and part of a diversified portfolio, i.e., stock market, because if that cash over time, if you don't do anything with it, it's going to depreciate away. Putting cash under a mattress in an inflationary period is not good. So to me, that's what we're getting into the whole future here, and that is that I can really sense and see. I'm hearing a lot of money managers are talking about, and strategists are talking about, was your average person thinking, well, maybe I should just put 1% of my portfolio in Bitcoin and put it away. And to me, that's the logical thing that's happening now in this transition. And most millennials, I think, believe in that. And why not? But don't trade it. Only if it gets stupid expensive, maybe get rid of some. Like if you hold a lot of gold and you need to buy a house, boom, and then you sell some of your gold to buy a house. But to me, that's where it's going. But in your checking account is more like Tether, and your savings and your investments is more Bitcoin and diversified portfolio.
I love it. I mean, this is. It feels like you're using a highly data-driven approach to arrive at conclusions that are long held within the cryptocurrency community about, what the true value proposition of Bitcoin is long term. And to me, the stablecoins are a nice intermediary step, because if Bitcoin in time becomes so fluid, so easy to transact upon, instantaneous and so forth, less volatile, there could be a potential that it becomes a currency. But I see that 10 plus years down the line. But to me, the even evolution to the point where it could become a viable savings account while you have a checking fulfilled by a stablecoin, it just shows that this new system it's not crazy, that it could replace a lot of the services of the legacy system, which is exciting.
Well, and also this trend towards cashless societies, and we all know what's happening there. Is one thing that governments love about things like this: they can tax it because they see everything.
Yep.
You can't hide it. There's ways. I mean, obviously, there's going to be ways to hide it. But how did the government catch Silk Road?
Yeah.
Just track the transactions. And
correct.
It's all about the tax man, and tax man, if he can catch every little transaction, and they will, it's where it's going. It's
a dream for the tax man. It's also a dream for the average citizen, as there's so much waste in the government, and we could actually track every single piece of spending in the government as well. So it's kind of a two-way street. The traceability, it could significantly increase efficiencies within the government. So I think there's a lot of ways you could view the traceability issue as a positive. What I'm excited about, though, is just the entire narrative, right? I've seen even your narrative and the way you view this asset shift over the past year plus that we've been having these conversations. What do you think is the most important trend we should be looking at right now?
The biggest thing, I think, for Bitcoin alone, I showed you the supply and adoption. Number one, adoption and ways we can track it. So I'm open. I hear things that you mentioned: hash rate, futures, options. the adult things, really that matter for adoption of Bitcoin. But one thing I think that's really going to shape the next 5-10 years is when, and I didn't say if, when we have some normalization of this stock market rally. Unfortunately, hopefully we won't get a significant correction, but we all know historically what we've had for the last 10 years is unsustainable. So at some point when that transitions, and notably if it becomes a bit of a bear market for a little bit, how the market will transition, how the market will perform, and I expect Bitcoin and the dollar, and with the stock market, the dollar to show weakness and Bitcoin and gold to show strength and to outperform. To me, that's what I expect, and I think that's what we should be looking forward to. See how it transitions, and that's kind of what I'm showing here. Is I'm showing a chart of the last, 2018 was a down year for S&P 500 and Bitcoin. They both peaked. Now we're seeing the stock market potentially peaking, but Bitcoin potentially recovering. That's a change. I mean, that's a bit of a paradigm shift in the way it's been trading. I think that's going to be enduring.
Amazing. What do you think is the likelihood that we have a bear market in sort of traditional stock market, commodities markets? And would that bear market have to be a bit severe considering the length of the bull market? Isn't there a correlation between the two?
Yeah, it's the concept of equal and opposite reactions. Well, that's a unique thing about the U.S. stock market. It's really designed to go up, and let's never forget that. And it does do that well, creates a lot of wealth. But I've been hard. I've been got 2018 pretty well, but last year I was wrong. I didn't think it would go that high. So I don't know, but I have to just be prudent and see how it works out. And a lot of it's becoming political now as we're entering the election season. So overall, the way I see it is, here's an asset class that looks a little bit overdone. And we all know that, and that's equities. And here's other asset classes that look nascent, and actually, they're ready to continue the bull markets. They're not even new bull markets, and that's gold and Bitcoin. That just for those two to get to all-time highs shouldn't mean a lot in the big picture. Now, once you get above those highs, then that's a big story. That's what I expect.
Of course, and obviously there's always that potential, right, for there to be a viral reaction of the market, for there to be an internet-esque growth, much like we've seen other internet phenomenon grow dynamically. So here we are, right? It's beginning of 2020. We have seen the market show some strength in the beginning of the year, big retracement, 7-month bear market after the crazy run up last year. What do you think we're looking at? Are we looking at a lot of sideways action? Are we looking at just a lot of volatility that's going to be hard to predict? Or do you see some strength right now in Bitcoin?
Strength in Bitcoin. So I'm showing on the screen, it's a little bit hard to see. I'm just showing the 1-year changes. Broad market, I look at the Bloomberg Galaxy Crypto Index, it's only 56%. Bitcoin's up 162%. I expect that trend to continue, meaning Bitcoin outperforming the broad market. It's just kind of going up following Bitcoin. And the way I look at it is what's going to take to end that trend. I can't really see it. It's potentially more likely to accelerate. But one thing I'm doing is, might be a little hard to see. I'm scrolling down to more the bottom of the screen, look at the broad market, like I look at the mid caps and the small caps. That kind of represents more of that massive supply problem. And they're underperforming, they're actually down. What's it going to take for that to end? My rule is, trend's your friend. Mm-hmm. It's not positive for alts, and it's positive for Bitcoin. And I'm afraid that this macro picture is just tilting positive. The big thing, a big test eventually will be when the U.S. dollar peaks, and it's still been quite strong. And what might be leading that is the U.S. stock market.
Yep. I constantly preach a layered buy sort of philosophy that, if you just space out your buys weekly, monthly, just try to diversify the time in which you get in and how much you weight that timing. Historically, Bitcoin, even if you started that at the peak of the last bull run and just bought weekly every week, you'd be up something like 80% if you had just done that even through the peaks of the last bull cycle and the bear market. So I think it's very interesting, and definitely I feel as excited now to be buying Bitcoin, layering in buys over time as I ever have. Something about the recent market volatility, I feel like there's real strength here. And if we do mount another rally up towards that 14,000 number and potentially beyond, I think it's going to start feeling really appetizing. It feels almost more believable than, I guess, last year's rally.
Well, last year's rally was your classic bear market bounce.
Mhm.
And those are really difficult to trade. And I remember thinking it could go up to 20,000 and should hold it at 6,500. Now that held. So now I think you're right. We're into more of a mature bull market, and I like what I've heard you say that in your program. I really like that philosophy. A little bit at a time, just make it part of your portfolio, and don't make it something that you worry about every day and watch every move. Because if you're not a full-time trader, that'll make you a full-time trader, and it'll be mentally and physically and emotionally taxing. You don't need that. No people. Just to me, it's a becoming a collectible. And I don't know what it's going to take for that to change. Something I can't predict, but it should continue the trend.
Yeah, until there's a big technological breakthrough, until there's another real introduction of new tech into the sphere, it's a collectible, and there's payment rails sort of built around it. But in general, we're seeing a trend that's not a 6-month trend. It's not a 1-year trend. It's a multi-decade trend of the first 10 years of Bitcoin have been like this. The next 10 years of Bitcoin could be like this. So having a short-term mindset, a trader's mindset, unless you're really trading full-time and with all the bells and whistles, I definitely recommend against it.
Oh yeah, well, you got an army of people out there with a lot better weapons than you.
For sure.
Unless you have the biggest, best weapons, don't try to beat them.
Yep. So final words here. I appreciate all the wisdom you've shared. I think this has been one of our best episodes yet. I really appreciate it. What if any final words here for FUD Nation?
Well, I think the good thing is, one thing is keep watching your show. I typically listen to it. I watch it less because I click it onto my phone and then do things. But one thing I think always our viewers need to remember is remember what you're buying and why, what your focus is. If you're trading, okay. But if you're buying anything other than Bitcoin, you're buying something that's typically way oversupplied, might be overpriced, and there's going to be a lot of competition in the future. As far as Bitcoin, it is become the go-to, and something needs to take it to push off that seat as the go-to adopted global currency. And typically that's quite rare once something becomes widely adopted. I don't expect that to continue.
Thank you so much, Mike. It's been an absolute pleasure.
Thank you. Thanks for having me.
Well, that's it. I hope you enjoyed today's episode. I know I certainly did. If you enjoyed it, if you got some value out of it, please hit that like button. And of course, if you're not already subscribed, hit that sub button and click that little bell notification. As usual, I'm Elio Trades. You're watching FUD TV, and I'll see you very soon on the next episode.